Hello everyone, it's Wednesday, November 6th. This is Liam McMahon with the daily video from globalfxclub.com. Thank you very much for taking the time to watch. I very much appreciate it. We're going to be covering a little bit of what we saw today and then mostly talking about what we could see tonight and tomorrow, as we enter the second half of the week and a very, very busy 2 days of fundamental economic events. So take a moment to look over the risk disclaimer. It should now be on your screen, and then we will go to the charts. Okay, so let's talk a little bit about what we saw today. We'll get to pound CAD in a second. It makes the most sense to look first at dollar CAD and then euro dollar for the two big stories for today. Dollar CAD's today a little bit lower. You can see this aggressive candle down after a much stronger than expected IV PMI print out of Canada. Beat by like 8 points. Came in above 60. Very, very strong number. And really, though, to me, the Canadian dollar CAD still looks relatively bullish. All right, I am not a big believer in CAD strength. In fact, if you follow me on Twitter, you know that I am actually very much a CAD bear and always looking for opportunities to short the Canadian dollar. I am very tempted, actually, by dollar CAD longs at around current levels as we're testing this 38.2% fib. We're near the bottom of this recent congestion pattern. I do still expect to move up towards 105, if not higher, but I'm going to lay off for now going into the end of the week, just because it's been an obnoxiously congestion pair. I'm not particularly interested in trying to get involved in it right now, but it does look constructive to me. Other Canadian dollar pairs, Kiwi CAD is one of the few CAD pairs where you could call me bearish. Actually, if we even go back this far, all right, you can see that this what do we want to call it? 8780 level is very significant. Back in April, we had our first test, and then more recently, here earlier in October, we had another 2 tests, and now we're up here again, squeezing higher after that stronger than expected New Zealand employment report that we saw come out yesterday. The pair respected these highs and is moving lower. If you got in around 8780, that's actually been a phenomenal trade. We pushed a little bit above these previous highs before reversing sharply, down about 55 pips or so actually from that peak. So that's been working out very nicely. I would expect some support to come in around 87. Generally, when I watch these kind of spikes higher, the retracement tends to follow some Fibonacci patterns. 38.2 is 87, and the 50% is 86.76. I would expect both of those to provide some support. We may very well continue lower from here, and if we do, and we do see some CAD strength, it would actually probably be more likely to be Kiwi weakness. Look for this level basically at 86 to go, and then we could get a very nice move back down to 79.50. Until that level holds, though, or until that level breaks, though, the pair still looks at least somewhat constructive, if not, at the very worst, just choppy. So I would not be looking to enter shorts here, but if you did get in close to the top, I would be trying to ride them down towards that 86.50 figure. Aussie CAD, all right, kind of a similar deal. We here on Aussie CAD, what's significant to me is that we have held this 50-period EMA on the 4-hour chart now 3 consecutive times on a closing basis, well, 2 consecutive, third pending. We have Aussie employment tonight that will decide the fate of Aussie CAD, I suspect. So it's kind of useless to talk about the immediate term future here. But if we do see a weak Aussie employment level number, look for a support buy off of this channel here around 98.73. And if we see a stronger than expected level, the next major resistance is 101. All right, so basically just keep your eye on this channel. Channel break, of course, would be a nice opportunity to get short. I would be happy to flip my bias on Aussie CAD should we see that. Pound CAD is definitely a pair that I am bullish on, though, for a variety of reasons. Yesterday's daily candle is a little bit concerning, especially as it comes in right about a 618% fib. All right. So I will grant you that that is a little bit concerning to me. But in general, I very much suspect we'll see 107 or 170 here on pound CAD. We may just see some consolidation or a little bit of a retracement first. The reason I am so aggressively bullish on pound CAD is this weekly or this monthly chart. I've tweeted and talked about this a bunch of times. I do genuinely, strongly, and still believe that we are seeing the beginning of a pound CAD move up towards about 2. It fits fundamentally with the Bank of England continuing to deal with stronger than expected employment reports, allows them to turn up the monetary policy pressure a little bit sooner than most places. And outside of today's CAD report, CAD PMI report, the Canadian dollar is not particularly been filled with good news lately. So you can see the congestion start happening right around this 168. I do expect that we may go sideways or down for a little bit, but I do continue to think that we'll see this pair rally throughout the rest of the year and into next year. Euro dollar, another pair that we need to talk about for stories of today. All right, you can see this euro spike here. We've continued higher since there. I did not end up getting in on this trade. I've talked about buying it here for a move up towards 136.20, followed by a steep sell-off. That's still intact. I didn't take it. I just saw other things I liked better. But the spike higher today was caused by news agencies reporting that an ECB source called a rate cut unlikely tomorrow, and that was enough to get some people to bail out of their shorts. In general, I think 3 banks I read somewhere are expecting a cut. The majority expect the ECB to stand pat. I expect the ECB to keep rates on hold. We may see Draghi suggest concern about the lower inflation levels. In fact, I would be stunned if we didn't see him suggest that. They're concerned and thinking about alternative opportunities to deal with deflation. But I don't think we see them cut rates. All right. That failure to cut rates could lead us a spike up into this 136.20, 136.30, even as high as 136.40 area. Could build up till there, and then if we do indeed see this spike down, all right, the spark for that could be a stronger than expected NFP report on Friday. All right, so that's how this particular pattern plays out if it does fundamentally. And if it doesn't, we break down sooner, take that to be as it is. And if we just continue higher, then if we manage to get back above like 137, these 138 highs I don't think are going to last very long. But we'll have to see exactly what the ECB throws at us tomorrow. The pound, kind of a similar deal actually, looking for it to continue to rally up towards 162, 163 in these previous highs. If I can get the trend line one, there we go. And then most likely from there, perhaps another strong move lower. All right, so that's another one to keep your eye on. Bank of England again tomorrow. The Bank of England announcement likely to be boring. Do not expect them to say anything significant. So we may see the pound consolidate and then move higher just on no news before a reversal. Pullbacks to about the 160 figure would provide an excellent opportunity to get long pound dollar for then move up towards 163. Dollar yen continues to trade within this channel, within this triangle, within this other triangle. 99 is the major support level. Euro yen by request. One of the yen pairs that I'm a little bit bearish on. I'm not touching euro yen. I will be happy to sell euro yen if we break here below this daily, this 4-hour channel. It's also a very clear daily channel. So basically, if we get below 132.60, it'll be all aboard the short train for me. But up until that point, I just don't have a great interest in trying to touch it now ahead of the ECB without a clear technical picture. Rally up towards this 136.50 area, all right, 300 pips from now, would provide a short. But really, for the way we're sitting right now, the only thing I'm looking for is a short below this 4-hour channel. If we do see some sort of intermediate pattern develop here, I think it could be a nice short-term long, but right now there isn't anything. Last and very quickly is EuroCAD. Watching a bear flag on EuroCAD. Again, ahead of the ECB, before a break, I'm not going to trade it, but if we do see this pair break down, this break out of this flag and continue to break down, I will be happy to pile on the shorts. All right, so good luck trading this second half of the week. Remember, just ton of event risks, so keep your stops tight and pay attention to the news wires. Thanks and have a great night.